Well, roller coaster market, this is not. Hi everyone, welcome to the Traders Circle weekly market update. Today is Tuesday the 30th of May, and just before I do get into it, you do need to be aware that anything I say is general advice only, so you have to consider whether it's appropriate for you. Alright guys, the big news of this week is the debt ceiling deal. So we've had a bit of news over the weekend that US lawmakers have agreed to extend the US government debt ceiling. So this has triggered some optimism in global markets across the past sort of 48 hours, should I say. We had a pretty strong Monday from the Australian market. We saw futures markets go up around the world. The US market was closed for Memorial Day, but their futures did close higher. And there was some optimism around that. I'm not sure this announcement is going to be enough to trigger a huge push higher, however, at least not in the short term. And the reason for that is, in many ways, it's just a car crash avoided. You know, you're still traveling as normal. It's just a negative outcome didn't happen. There wasn't necessarily a major positive outcome in the short term. So you just managed to avoid a car crash. Your car's now just traveling along as it normally was. So we'll have to wait and see whether this will trigger an extended period of bullish movement for markets, or whether it'll just be a nice little short-term little blip. It does, however, mean that the consciousness and the mind of markets will move on to the next thing. And, markets are pretty quick to move on to the next thing. And for our market, that's going to be inflation and interest rates. Really, that's been the main story of all Western markets for the past sort of 18 months. And we're going to pretty quickly move on to it here in Australia because we've got some major events across the next week. The first of these will be the Australian CPI reading, which will come out tomorrow morning, 11:30 a.m. Australian Eastern Standard Time, and that's expected to show Australian CPI, which is often taken as an analogue for inflation, as coming down to 6.4% year-on-year growth after 7% growth previously. So it is good that it's coming down, but 6.4% is still extremely high, more than double the target range. The RBA wants 2 to 3% CPI growth. And sort of 6.4% is not a level at which the RBA will keep pausing interest rates. So we will see the RBA June rate decision the week after, Tuesday, the first Tuesday of June, and Tuesday the 6th, I believe it is. And I do think they will pause at that meeting. Now, 6.4% does not mean pause. Well, this time around it might, because other economic data has been weak. So we've seen fairly weak or weaker than expected Australian unemployment. Today we had building approvals that were weaker than expected. Most Australian economic data has been coming out pretty much worse than expected at this point. And that may cause the RBA to pause another month and just wait and see if CPI keeps falling from here. 6.4% still extremely high, and that's, without wages growing at what the RBA would term a wage price spiral. Wages have been fairly stagnant. So, it'll be interesting to see what happens from here, but if CPI growth stays at that level, maybe we'll see a rise in June, maybe sometime after that. Finally, what I wanted to talk about was the low vol in our market. Low volumes, but also low volatility. We've seen some pretty underwhelming volumes in our market. Some of the lowest volume trading days this year have occurred across the past fortnight. Really, it's been underwhelming, and we've also seen low volatility. Low historic volatility in the form of low share price movements, low daily share price movements. Haven't been big moves one way or another. It's been fairly sort of tight trading ranges. And low implied volatility. Low volatility implied by the options market. So even the options are pricing in very low share price movements as well. And it's been an underwhelming market. Neither of these things are what we want to see as traders. We want to see movement. We want to see activity. We want to see trades. We want to see things happening. And this has not been a very happening market. In fact, it's been a rather square market for the past fortnight. So let's have a quick look at the charts. This is our market, this is the XJO, and really for the month of May, we fell off, we got to 71.50, and we've been basically trading between that level and maybe 72.80, 72.70 across the past month. A very, very narrow trading range. We did dip slightly below that 71.50 level, but we came immediately back above it and back into the middle of that range. Overall, we're just in a broad pennant pattern. We've got this gradual uptrend line since late last year. We've got this gradual downtrend line since the start of this year. And we're also in a sideways range with these support and resistance levels. I'm not sure what's going to break us out of these ranges. Maybe tomorrow's CPI reading, maybe a surprise move from the RBA next Tuesday. But overall, we just look further sideways. People are unwilling to commit to a direction from here. It gets to a level, no one's willing to buy beyond that. It sells to a level, no one's willing to sell beyond that. So until one of those things changes, we just look further sideways. A really good indication of this is if we have a look at my purple line here. I'll make it a bit thicker, and you can see that's my 50-day moving average. Really, we're just trading along the average price for the last 50 days. We haven't moved beyond the average price. We've just kept right there for the last 50 days. Alright guys, so let's have a quick look at the US market as well. They've been a bit more positive than we have. They've been grinding higher. And yeah, you know, they have been closed on Monday, so they will open higher tonight after the debt ceiling deal, and that should put them beyond that 4,200 resistance level, which means we could see them continue higher to the next level, right around 4,300, and that's from about August last year. Overall, they are a bit more positive, but really they've been mostly sideways as well. Yes, they're probably closer to their highs, but there's been a real lack of directional movement for the past month or so. They've stayed in a very narrow range as well. So not really too much triggering directional movement over there. Like I said, maybe we'll get a bullish breakout with that debt ceiling deal, but overall, things still looking more sideways than anything. Alright guys, that's it for this week. Is there something you think could trigger a big movement in the market? If there is, let us know in the comments. Give us a tip, give us a heads up. Otherwise, you know, leave us a like, leave us a subscribe, and I'll hopefully see you next Tuesday. Bye for now.